Bitcoin is in a nosedive, and it looks like it is determined to make a new all-time low this year. Have you wondered what is causing the storm Bitcoin is going through? This video will explain why this Bitcoin crash is different. It is nothing like you've ever seen. If you've been following the crypto news lately, you would know that the total value of the global cryptocurrency market has dropped from $1.02 trillion to $983.72 billion, representing an 11% reduction, as reported by CoinMarketCap. Most main cryptocurrencies have been trading at losses recently, putting even investors with a long-term perspective under pressure. Luna-Terra crash is the main culprit. After the Luna-Terra debacle, everything got off to a rocky start. It was an occurrence that had serious repercussions for the cryptocurrency ecosystem as a whole and the investors in question. Before the crypto crash, the stablecoin TerraCoin had a market capitalization of more than $18 billion. Many investors lost their whole life savings that they had stored in TerraCoin. As devastating as it may be, some believe it will benefit the crypto market in the long run. More on that shortly. Kindly subscribe to this channel to stay updated on everything happening in the crypto space. You do not want to miss that. For those who may not know, stablecoins are designed to be priced equivalent to the US dollar or another fiat currency. They exist primarily so that crypto investors can easily get in and out of the fiat with no third party, in this case, a bank, to authorize these transactions. The organizations that issue these stablecoins hold a cash reserve in the form of dollars or commercial documents or receivables that back each coin to its face value of $1. However, the crypto meltdown began when Terra Luna, a popular stablecoin, had lost 99.9% of its value in dollar equivalent. Terraform Labs, the firm behind Terra, devised a strategy to sell all of its Bitcoin holdings to restore the price peg to $1. However, they were ultimately unsuccessful in achieving this goal. Because of this, the value of the cryptocurrency market dropped by more than $40 billion. Likely, the risk seems to be contained from affecting other aspects of the economy, according to experts. Please grab a cup of coffee as we explain that in a moment. The crypto meltdown won't affect the real economy. A popular joke in the banking sector is if you owe a bank $10,000, you've got a problem. But if you owe them $1 million, the problem is on them. Either way, someone is at the receiving end. The dynamic that exists between cryptocurrencies and debt is quite essential to understand what is happening. Many investors use real-world assets as collateral to purchase cryptocurrencies. Since the prices of these real assets are fairly stable, they are not affected by the volatility in the crypto market. So this kind of borrowing is sort of contained in the crypto world. However, there are some notable outliers, such as When MicroStrategy, which obtained a Bitcoin-backed loan for $205 million from the cryptocurrency-focused bank Silvergate in March. For the most part, crypto-backed loans are only found within a sector-specific echo chamber, although still risky. Additionally, according to a recent study note published by Morgan Stanley, most crypto lenders have been providing loans to cryptocurrency investors and entrepreneurs. But they confirmed that the spillover risks associated with plummeting cryptocurrency values to the larger fiat and dollar-based banking system in the United States may be limited, which confirmed the earlier accession. Kevin O'Leary, a venture capitalist and celebrity investor, notes that most people do not have institutional backing for their digital asset holdings, despite the widespread excitement surrounding Bitcoin and other cryptocurrencies. His main concern was that the crypto market is seeing this level of volatility because of a lack of legislation, especially with stablecoins. There's undoubtedly been banks and other financial institutions which have shown interest in crypto as an asset. Some banks have their own set of regulations and need to make sure that there are appropriate investments, even in cryptocurrencies. However, in reality, there isn't much of that investment going on. On the other hand, some investors believe that the United States has been exposed to the same level of risk as it had been during previous financial crises. Additionally, there are analysts working on Wall Street who believe that the repercussions from failing cryptocurrency initiatives are beneficial for the industry as a whole. They see it as a kind of stress test that helps flush out obvious faults in business models. To buttress this point, Alka Shah, global crypto and digital asset strategist at Bank of America, maintain that the collapse of weaker business models, such as Terra USD and Luna, is likely healthy for the long-term health of this sector. So, there you have it. If you found this video helpful, please check out our video on possible reasons why the Bitcoin crash is serious and learn how low the crash will possibly go. See you in our next video.